welcome to this week's On the Spot. I'm here with JP Hampstead. We're going to update everybody on what's been happening in this week's spot market. So, what are we seeing right now, JP? It's a pretty flat market.
It's flat and it's low. We were just talking before the show started that spot rates on a national average basis are down in the sort of the mid 140s, mid to low 140s.
Right.
Kind of right around what we would consider carriers' operating costs. So,
So we're basically hitting a floor where we think that we're going to move a little bit more horizontally over the next little bit. Is that right?
I think so, and we should note that this floor that we're at now is actually a little bit above where we were in February, March, April, which was down in the 120s. Mm-hmm. I mean, I think that was clearly unsustainable. I don't know how long current conditions will last. I mean, we had several publicly traded companies, including Hub Group and C.H. Robinson, say that they didn't really expect the peak season to materialize, that they expected adverse business conditions to last for another couple quarters. So,
well, let's clarify that. Let's dive into that a little bit, because peak season traditionally, we have two of them in the freight market around June, into June, and then again in November, December around the holiday season.
Correct.
And so, if peak season is considered to be moot, I don't think we're going to see no peak season. I think it'll just be very muted peak season.
Yeah, I mean,
right?
There's no getting around the fact that after, roughly around Thanksgiving and after, there's going to be constraints on capacity because of the holidays and weather and things like that, and hopefully there will be accelerated freight demand, just in terms of retail and e-commerce. Those two things working together should produce enough kind of volatility to get some higher rates. But I mean, and keep in mind, we actually saw a muted retail peak season in 2018 as well.
It was significantly muted compared to June, I guess.
Exactly.
It depends on your point of reference as usual, but that one was what, 20 to 30% lower than June's peak on the spot market, and this one I think we're forecasting it to be right around 4 to 5% lower. Of course, this year's
off
June,
a lower base.
Yeah, this year's June is much lower than last year's June. So, there's not a lot of volatility in the market. Are we seeing any regional disruptions, anything like that this last week?
So, I think the Chicago to Atlanta lane has been strong ever since Atlanta slipped into backhaul territory, right? Which, it's kind of like, it's bad news, but it's good news, in some ways. I have heard, this was kind of interesting. I talked to some brokers earlier this week who said that they were having trouble finding reefer capacity in the upper Midwest.
Which is crazy, right? The reefer capacity in the Midwest, it's cold.
Right. Well, it's cold, so it drives up demand, right? If it's too cold, you have to have temperature protection. But they actually called out, of all things, deer season. So they were kind of saying that in the upper Midwest, in places like Minnesota, Wisconsin, Michigan, even down into Iowa, so markets like Cedar Falls and Dubuque.
Yeah, Dubuque.
Okay. Not from the Midwest.
Right.
Basically, a lot of drivers are deciding to spend some time outside hunting deer.
It's a legitimate thing.
I think it was muzzle loading season first, and then it comes rifle season.
Yeah.
So I don't know the ins and outs of that, but apparently lots of people are off the road and not available for dispatch.
Especially out in those rural areas, upstate Pennsylvania, huge deer country.
Yeah, and in a lot of those markets, we're seeing reefer tender rejections north of 20%. Still off of where it was year over year, which again, this time last year would have been deer season plus a relatively constrained capacity situation.
We were still coming down off that high, if you will.
But
I think
well above the national average in terms of tender rejections.
Right. So we're expecting this next week. It's probably going to be more of the same for another week or two, or do you think it'll last further into that? Do you think it'll be a horizontal market, or do you think we're going to dive a little deeper?
I don't think we'll dive deeper. It's so weird when you're trying to judge what the economy is going to do or something like that, because while we have had pretty bad industrial production numbers, pretty bad PMI numbers.
That's been happening for several months though, right?
Yeah. on the other hand, you look at the equities market, and they're having this weird irrational melt up, and the S&P 500 is hitting all-time highs.
Right.
Maybe on the hopes of a trade deal. I think that, the difference between like a CEO making a capital expenditure decision based on trade policy certainty that is going to take much more of a firm commitment, much more of a kind of a lasting sort of planned out timeline of what's going to happen as compared to like an equities trader who's like, oh, like good tweet today, like let's buy. You know what I mean? I think it's going to take a lot more for companies to commit to investment and spending, the kind of things that drive at least the industrial side of the goods economy.
Yeah, because most of the economy, as we know, is consumer-driven, service-driven, service economy, 70% of it effectively. But that doesn't mean that we all depend on pure consumption. I mean, the goods are moving across the country. We import them from China. The trade war, of course, has had its impact on the freight market as well.
Definitely. And we had a really solid September. All the numbers haven't come in from October, but we expect them to come in below 2018. 2018, this time, October, November, that was like the height of like the tariff like pull forward, and it was just getting crazy. It was like record TEUs for like every port on the West Coast and East Coast for that matter. And no one expects that. We are seeing solid volumes, but not records.
And of course, we have the oversupply situation that we're still going to recover from. That's going to take several months, more than likely.
Yes. So, as of the middle of 2018, trucking carrier failures were running at about 4 times the rate of as of the middle of 2019. 4 times the rate of 2018.
Right.
So about 310 failures in 2018. By the midpoint of 2019, we're up to about 640, so twice as many in half the time.
Sure.
Now, keep in mind that a trucking failure doesn't necessarily result in the permanent loss of a driver available for dispatch.
Sure.
There's plenty of enterprise carriers that are still struggling to keep over-the-road trucks seated.
That's a good point.
A lot of these guys can find jobs. So the capacity situation is always the most difficult to measure.
Sure.
The way we look at it is through outbound tender rejections on a national basis, which are at 5% or below.
Yeah, right around 5%. They've been really horizontal though for the past month. It's almost like carriers are okay with where their contracts are at this point, and we just had bid season. Bid season's still occurring right now. What have you heard?
Well, I've talked to some people who were bidding on Anheuser-Busch. They did a pre-bid for their like sort of top 8 brokers last week, and then they're doing like a full bid either this week or next week for everyone. And from what I heard, the pre-bid was intensely competitive, driven by some new digital players and also some very large incumbents who are either have a mandate to grow volumes aggressively or have a mandate to maintain market share at all costs.
Yeah, because traditionally when the market goes soft and flat, everybody turns into volume plays. Carriers, they just need more volume. Brokers want to have as many transactions as possible. So that's why we have this operating below cost figure that happens every now and again, because if a carrier's trucks are sitting idle, they're losing money whether they like it or not. And so they get into this mentality of, well, we're going to lose less money. Well, it works for a short period of time through these bad, these soft spots, but long run planning, it doesn't add up because you're still losing money overall.
Yeah.
And I think that's interesting to see, especially on the bids, as carriers and brokers, the more desperate they get, the more aggressive they get with their rates.
Oh yeah, definitely. And I talked to someone yesterday who said that the market right now is very price driven. Like in terms of interacting with customers and shippers, they said that service, people talk about service, but right now all transportation managers are looking to recover kind of what they felt that they gave up in 2018.
Right.
And so, that's what their management expects, and that's what their sort of marching orders are.
Right.
And it's it's a pretty fierce price war right
So
now.
essentially, everything that they gained in 2018 is now being pulled back. I think I've even heard some people say that they pull all the way back under last year's
So on a
contracts.
stacked basis, they're saving money.
Wow, that's insane.
It's quite a fall.
Considering, what do we need to look for, though? I mean, in terms of a signal that things are kind of starting to mellow out. I know that we're in a very seasonal, cyclical industry, and right now we're at a low end of a cycle, or we think we're at a lower end of a cycle. We're going to hit a low end of a season, so it's kind of like the tides, coming back out.
Yes.
So do we think that we're going to have this double bottom effect over the winter?
Yes,
Yeah.
I do, and I think we cover 62 companies earnings calls at FreightWaves. Maybe 30 of those are transportation companies of various kinds, whether they're railroads, intermodal companies, trucking companies, brokers, maritime airlines. Everyone is guiding for, they're optimistically hoping for a recovery. They always say second half of 2020 or middle of 2020.
Right.
No one predicts a recovery in the first quarter of 2020.
Yeah, you typically don't see a recovery in January, February.
So I'm not looking forward to the first quarter.
Yeah, the first quarter. So this actually is eerily reminiscent of 2016 for me. Back then, we didn't realize that we were going through a freight recession. Most people don't. I mean, you're sitting in your desk, doing your job, your day-to-day, and you're sitting there pricing stuff, you're going through your operational plan, and you're really blind to what's going on around you. And you don't realize that, just because you're hurting, you think it's just me. We're doing something wrong, and you work on trying to fix yourself, and then you're not looking at what's going on around you. Well, everybody's hurting during this cycle.
Right. So we know that people have a mandate to grow. The capacity is loose, and we also know that national volumes are about 2.2% below where they were last year. Which, again, at this point last year, everything had already started to fall apart. So 2.2% below November 2018 is significantly off.
Right.
And that's, it's not just you, in other words.
Right.
Everyone is feeling the pain. Yeah. Brokers are hiring salespeople, not carrier reps.
Right.
And they're making a lot of cold calls.
Exactly. So, well, not a lot of good news this week, but maybe in the coming weeks we have peak season coming up. Maybe they'll surprise us with some retail. Retail is still growing.
Right.
Year over year, it still looks pretty good. Last year's retail season was surprisingly disappointing, I think. If I recall, maybe it just wasn't as robust as people were anticipating. I don't think it was necessarily bad.
Yeah, it was. I mean, when you saw the Q2 GDP numbers come in at like 3.2% in 2018, that's like turbocharged for the American economy.
Right.
I think people expected like a complete blowout.
We had some tougher comps
in retail.
essentially.
But I think that the way that e-commerce is evolving, it will demand more capacity just to fulfill same day and next day orders on a nationwide basis. I think that consumer expectation, I think like a long term, and maybe it'll show up this retail season, that long term, the way that supply chains are evolving are becoming much more capacity intensive, demand intensive. So that's,
there's still service. You still got to service the freight. So that'll drive up rates here in the next coming weeks, more than likely, more than the volumes will potentially, but we'll see.
Exactly.
All right. Well, thanks, JP. That does it for this week's On the Spot. Be sure to check us out on all our social media, FreightWaves Live, if you're coming next week. When is it?
The 12th and 13th.
12th and 13th.
It's next week, Tuesday and Wednesday, right?
Yeah, so hopefully we'll see you there. Everybody have a great week.
Our industry is moving faster than ever. Where are freight volumes headed? How will this affect capacity? And of course, what's the newest technology that can benefit your business? Those questions and many more will be answered at the industry's hottest Freight Tech Conference this November in Chicago. Come join us at FreightWaves Live November 12th and 13th at the McCormick Center. Visit FreightWavesLive.com to register.